Our next witness is William R. Smith. Mr. Smith is President and CEO of Termax Corporation in Lake Zurich, Illinois, which I have the honor to represent. Termax is a small family manufacturing and engineering company specializing in metal and plastic fasteners. Mr. Smith is testifying on behalf as well of the Precision Metal Forming Association. Welcome, sir. You have 5 minutes. Thanks.
Thank you. Thank you. Chairman Walsh, Ranking Member Schrader, members of the committee, thanks for the opportunity to be here today. My name is William Smith. I am the President and CEO of Termax, based in Lake Zurich, Illinois. We're members of the Precision Metal Forming Association that has about 1,000 member companies representing $113 billion in precision metal products. That industry. About 2/3 of our member companies are structured as Subchapter S Corps or similar pass-throughs, as is Termax Corp. The industry averages about 50 employees per business, most of which are family-owned like ours. Now, my father founded the company in 1971, and in 1998, my brother and I took over the operations, where we've seen the company grow to about 250 employees, and we hold over 60 patents. Now, while primarily servicing the automotive industry, our company manufactures clips and fasteners for many industries, including appliances, lighting, toys, construction, automotive, and we're the #1 exporter of parts in the world for these sorts of things. Now, before taking over the family business in '98, I worked as a CPA, a certified public accountant, for roughly 20 years, also a small business, giving me a unique perspective to understand both the production and finance sides of manufacturing in America. In my experience as a CPA, the vast majority of manufacturers are structured as S corporations, LLCs, and partnerships or other pass-through entities. Everybody has statistics. Our statistics showed that 50% of all private employers are structured this way. And among the PMA member companies, we know that 64% are also pass-through entities. We're structured this way because we're family-owned, with a limited number of shareholders and owners who are often our siblings and increasingly our children and grandchildren. It just makes sense. Manufacturers like us pay our income taxes at the individual rate. We claim deductions and credits at that personal level. This means that the financial and manufacturing success of our employees and businesses are directly tied to that of the business owners, the Smith family. The majority of manufacturers leave most of the money in the business, directly reinvesting in our employees, facilities, and equipment. And this is really the important point there. We're getting taxed on monies that we never see. It's just being held there. Now, due to our current U.S. tax code, we're taxed on income we don't take out of the company, but leave in the business to reinvest. This means we have fewer resources to put towards hiring, training, and buying new machines. In my experience, smaller manufacturers, based on wage and K-1 income, pay 30% or 36% in taxes. They distribute 18% to owners and reinvest 46% in the business. And that's conservative. We at Termax, we distribute 10% to the owners. The rest is either used for taxes or reinvestment. So the more money that goes into taxes, the less that's reinvested for our employees and machinery. These funds are taxed at the current 35% individual rate, set to increase to 39.6%. If statutory rates increase by nearly 5% as scheduled, business owners have to take it out of the pie somewhere, either from the owners' families or from the reinvestment in the employees and company, usually both. Tax increases result in reduced cash flow in the business, causing a major unintended ripple effect, limiting access to capital. Banking and other lending requirements have toughened, forcing most owners to leave retained earnings in the business for the sole purpose of meeting collateral requirements. The current system penalizes and taxes business owners who leave money in the business for reinvestment, resulting in reduced ability to secure loans. Therefore, increased tax liability means less money in the business, which will restrict the ability of a small business to access timely and sufficient credit to purchase machines, expand their facilities, hire new employees. This is particularly true for a pass-through entity like ours, who's taxed regardless of the actual distribution made to the owner. This is clearly a politically charged issue, But from the standpoint of the small business owner, we must do what we can to reduce our effective tax rate so we can increase our investment in new technologies and people to remain globally competitive. Over the last few years, Termax has seen our American competitors decrease to just 2 from approximately 8, while our foreign competitors have increased dramatically, 4 to 5 times what they were previously. This is where tax deductions credits come in, as the only tool we have to reduce our effective tax rate and give us an incentive to take action at that time. All manufacturing companies claim deductions and credits, from the R&D credits to bonus depreciation. Our company expects to spend $1.5 million in 2011 on R&D, just to develop new technologies for the automotive and construction industries. This is why removing deductions and credits such as the Section 199 deduction for all businesses will increase the effective tax rate and burden on all S corporations and pass-throughs. So some have asked why we S corporations simply do not convert to becoming a traditional C corporation. First, the costs associated with the conversion are astronomical, especially for a small business. Another reason is due to the family-owned structure of the business. When an owner passes a company down to the next generation, there's a much greater tax liability as a C corp. This is akin to the family farm being sold to pay taxes. If you ask them, most manufacturers want stability, simplification, and globally competitive effective rates. Prime example is the alternative minimum tax, the forerunner of the current millionaires tax that's being discussed. As a business owner, the most important questions are, what is my total federal, state, and tax liability? What's left over for me to invest and grow my business and create jobs? Thanks for the opportunity. Sorry it took a little long.
No, thank you.